some more opinion on the markets now. Andrew Holland of Ambit Investment Advisors joins in to give us his view on all that's transpired so far. Andrew, good speaking with you as always. Good morning. In the last couple of months, the market has had a decent performance. You know, we've rose from that, or rather we've risen from that 7,500 level, now at 8,200 plus. What's the sense you're getting about the traction from now until the end of the year?
So I think, I mean, this week's an important week. We've got the Fed and we've got the Bank of Japan. So let's see what comes out of that. And also, you know, we've got this, 5-year plan being kind of etched out in China. So again, we could see something from there. But you know, I think the markets are still climbing the wall of worry on China. You know, despite interest rates coming down, it's not seen as a positive. And I think what the markets still want from China is some kind of fiscal stimulus. You know, to make us all feel that the economy is being looked after, and there's incentives there for the economy to at least stabilize, if not grow, from where we are. And I think until we get that, you know, markets are going to be, you know, continue to be a little bit volatile, because, you know, the numbers coming out of China, you know, still no one's believing, and that's fair enough. But if China can just stabilize what we're thinking about the economy, I think that would be the uplift we need for our, you know, for not just our markets, but for global markets as well. So that's what we're looking for. I think that's the key to us, is what China does next.
Okay. Morning, Andrew. As always, good to have you with us.
Morning.
Before I come to the global scene yet again, how has the earnings scene looked so far for you? More disappointments or unexpected lines?
Actually, I'm very encouraged because, you know, what you are seeing for the first time is, whilst, you know, top line growth is not so great, the operational gearing is starting to have an impact now, on a positive impact on margins, and also the impact of lower commodity prices is also helping margins. So, you know, I'm very encouraged that the net profits or the profitability of companies is starting to improve, both at mainly at the operating level. And if you throw in then next year into financial gearing, I think that will continue to help the earnings momentum going forward. So I'm actually more encouraged this time. I think I've seen more upgrades than downgrades so far.
Well, that's good to hear, but let's get a little more granular, Andrew. You have, you know, long positions in names like Asian Paints, and this time the consumption story has actually, you know, seen slower growth than what we've seen in the last couple of quarters, whether it's paint companies, whether it's white good companies. Would that worry you, or do you think it's just a patchy phase?
No, I mean, I think the operating margins for the likes of these companies have improved significantly because of the lower input costs. So therefore, there's only so much benefit you can get from that. But in other industries now, I think you're starting to see the impact of lower commodity prices. That's the point I'm trying to make. It's not necessarily the industries we know and have benefited from that for the past year and a bit. It's in it's other industries which are starting to benefit from it.
Okay, I'm more interested in HDFC actually. Did you pour over those numbers, Andrew? I know you're long on HDFC Bank as per your September 15 data. How do you stand on HDFC, and what did you make of the numbers?
Yeah, the numbers are okay. I mean, they're in line with our estimates. A bit of a slower quarter than usual. But nothing, you know, that we can see would change our view on HDFC going forward. You know, the recent fundraising will obviously help their kind of cost of capital, and that will, you know, keep margins on spreads in place. So, you know, I think, you know, when you set the bar high, that, you know, expectations always remain there. But a slow quarter is okay for us.
Okay, a slower quarter is okay. So since you did say, you started off by saying that you are, you know, you're happy to see the way earnings have shaped up in this quarter. What are the sectors that you are bullish on, where you expect to see more value and that could give you higher returns, say, in the next couple of months?
So we remain very positive on the banking sector. We still think there's room for the RBI governor to do more rate cuts, 50 basis points. only actually takes us 50 basis points lower than we were in 2013 when the currency crisis happened. So I think there's a lot more room for the RBI governor to do more. And I think he will. I think his statement was so dovish, I was actually very surprised. So I think there is more room for rate cuts, and I think that's the banking sector is where I think I want to play in during the well, not just the short term, but the medium term as well.
Would you therefore also play the NBFCs, Andrew?
You know, the ones that we like are pretty richly valued, so we probably would play the banking sector rather than NBFCs at this point.
Okay. Well, how did you look at the NPL performance? I mean, we don't have much to go by. We had just some two smaller PSU banks, State Bank of Bikaner in Jaipur and State Bank of Mysore, both of which reported flat NPA performance. You don't think that'll be a big bomb to worry about?
Yeah, I think we know all of this. I think we know the PSU banks have still got their own problems. And you know that will, each bank will probably, come out with their own set of horrors for us. But it's not the PSU banks I want to play; it's the private banks I want to play at the moment.
Okay.
And I've said to you before that once the sector, starts moving up, then the PSU banks is not something that we might want to own, but we might want to rent them for a shorter period, and that's the way we look at the PSU banks.
Okay. You have a long position on Infosys. What did you make of this quarter's earnings from the Big Four, and or rather from the top three? And how do you expect things to shape up from here in terms of the pecking order? Will that change for you?
Not really. I mean, the results were okay. I mean, again, nothing to write home about, and I still think the whole sector is going to be under pressure. That decade of growth has gone away, I'm afraid. So they're all having to try and reinvent themselves. And I think the jury's still out on whether they can do that. But the valuations are looking a little bit more attractive than they were, say, a year ago. But at some point, I'm hoping that these companies will give us some of the cash back in forms of dividends, which they haven't done yet. So, if you're not getting growth, give it back to the shareholders.
Okay. Well, the other space that you have liked is the pharmaceutical space, and you are bullish on names like Glenmark Pharma, Andrew. But today we have Lupin announcing their numbers, and the problem with this space is now the valuations have become so expensive that there's no scope for disappointment. And for a company like Lupin, there's expectation of a lackluster growth. What do you do at a time like this?
Yeah, the pharma sector is a difficult one because there's so many regulatory problems for the pharma companies. It makes me wonder whether US pharma companies are helping or nudging the regulatory authorities to look at India more closely, because it's happening at every day there's some kind of regulatory problem for one of the pharma companies. So maybe we just have to go through this phase, but it's a sector which you should be able to sleep at night easily, and it's not. So it's the valuations, as you say, are quite demanding. Therefore, if anything negative happens, the share price takes a quick hit. So it's not a sector I feel I want to be in. It's a place I want to hide in difficult markets, along with IT. But that's about the best I can say for these sectors.
So which other sector or stock will let you sleep at night? You spoke about the private banks, of course. Would it be autos, the big boy Maruti coming today?
Yeah, our view on that particular stock is that the yen will drift towards the 130 level. I expect the Bank of Japan to do some more stimulus, and that will weaken the currency going forward. So Maruti is obviously a big beneficiary of that tailwind, and whilst it's a very competitive market, the margins for Maruti will continue to expand. So I think it's one of the best within the auto pack. But again, the way we've been playing the whole of India is this: who supplies India, and we think that's the theme that will continue to play out over the next 2 to 3 years. So auto components, not necessarily the Bharat Forges or Motherson Sumis, but some of the other companies within the sector, are set to benefit from both operational gearing and financial gearing as well.
Which is that? I mean, if it's not Bharat Forge and Motherson, which ones would they be? Tire companies?
Yeah, so no, not tire companies,
Okay.
it's the auto components industry actually.
Right.
Okay, fair enough. Well, yeah, that's a long, long list of companies that we can look at. But how do you approach the telecom space now? Because there's so much competition there. The numbers have been weak this time. And then you have that big elephant in the room, which is RelGeo, that's coming very soon. Is this a space that you stay away from, or do you look for opportunity during these adverse times?
I'm not looking for the opportunities. I think even without Reliance coming in, there's pressure in the sector, and that's coming out in the numbers. So, if anything, it's going to get worse for these companies, not better. And obviously, I'll see where the valuations take us. But at this stage, I think the share prices of the incumbent telecom companies are probably going to fall in the very short term ahead of a Reliance launch. I think we're all worried about what that could mean. We're already seeing what it means at the moment in terms of the numbers, and they're just not going to improve. So again, it's a sector I don't need to be in. I don't find there's much value or anything exciting. The excitement is on the downside rather than the upside.
Okay. Well, Andrew, you spoke about private banks and autos, but I don't think you've completed your reply on what are the other stocks that interest you.
I think I'm still optimistic on the Reliance launch, and I think that could be not quite the game changer, but for years we've just been watching Reliance spend money into the telecom and the retail sector with no kind of guidance on what that really means. And I think that's going to start coming from the end of the year onwards, and I think that's we haven't valued any of these companies, and I think the market will have a relook again going forward, and I think that's the catalyst for the share price to move higher.
All right, Andrew, thank you for joining us, and you have a good day. That's the word